Welcome to the deep dive. Today, we're taking a plunge, a really deep one, into something incredibly relevant if you're navigating complex, fast-paced stuff, especially, trading. We're looking at the psychology of wins and losses. It's quite surprising, actually, how both success and setbacks can, well, derail your progress.
Yeah.
And there's this hidden mental trap involved. Confirmation bias. Understanding that is really key.
Absolutely. That's our mission today, really, to unpack this dual nature of winning and losing. We'll look at how our brains are, well, frankly, hardwired to react.
Hardwired.
Yeah, often in ways that feel totally counterintuitive. And then the important part, we'll get into practical strategies. How can you actually harness these reactions for growth
Okay.
instead of letting them lead you down, those destructive paths? And like you said, this isn't just trading. It's universal. Human decision-making under pressure applies everywhere.
Okay, let's unpack this then right from the start. Confirmation bias. Where does something like that even come from? Because it doesn't feel like just a bad habit you pick up, right?
Yeah.
It feels deeper.
Oh, it's definitely deep-seated. It's fascinating, really. It goes back thousands and thousands of years. Our brains, you see, have these two key players relevant here.
Okay.
You've got the prefrontal cortex. That's let's call it the advanced rational human part.
Like the logical bit.
Exactly. And then you've got the amygdala. That's the emotional, survival-oriented part, sometimes called the chimp brain or monkey brain.
Oh, okay. I've heard that.
So think about our ancestors. They lived in constant danger. Life-threatening situations were the norm.
Right.
So naturally, they developed a very heavily wired amygdala, super sensitive. If they faced a threat, say, a predator, bang. They instantly label it all bad. No nuance.
Just pure danger.
Pure danger. And confirmation bias would kick right in, only letting negative information flood their awareness. Danger, danger, danger.
Got it.
And at the same time, something called disconfirmation bias would block out anything positive, anything irrelevant to the immediate threat.
Like, the nice weather wasn't important if a lion was nearby.
Precisely. This whole process just accelerated adrenaline, cortisol, primed them for fight or flight. Absolutely essential for survival back then.
Okay, that makes sense for survival. Fight or flight.
And it worked the other way, too. If they saw potential prey or, a reward.
Food,
exactly. Yeah. The mechanism fires in reverse. It accentuates all good, blocks out the drawbacks, the risks, primes them for capture. Run from the threat, capture the food. Pure survival logic.
And here's where it gets really interesting for us. Like right now, because most of us are sitting maybe in an air-conditioned apartment. We've got risk management plans.
And spreadsheets even.
Spreadsheets, exactly. But these ancient mechanisms, they still fire off today. It's like our brains haven't quite updated the software for modern life. A market dip feels like that saber-toothed tiger.
That's the absolute crux of it. And it leads to a key question. If this bias helped us survive, how does it affect our ability to thrive now in this complex world?
Yeah.
Confirmation bias, essentially, it narrows your awareness. It does this to ramp up emotion.
Okay.
Now, that's great for survivability in a real life or death moment, but it massively decreases your thrivability when you need clear, objective thinking.
Right, like in trading.
Exactly. More awareness actually means less confirmation bias, less raw emotion ruling the show. It allows more activation of that prefrontal cortex.
The rational part.
The rational part, which lets you stick to your plan, make objective calls, and avoid getting, hijacked by these ancient instincts that just aren't helpful for your modern goals anymore.
It's like needing to train that newer part of the brain to sort of override the old wiring.
That's a perfect way to put it, training the prefrontal cortex.
So, okay, that ancient wiring, that bias,
yeah.
How does it specifically play out when we're actually in the market? Experiencing wins, experiencing losses, it sounds like it could mess things up either way.
Oh, it absolutely can. The impact is profound, and like you said, on both sides of the coin. Let's start with losses.
Okay, the painful part.
The painful part. So, a trader takes a loss. That can trigger the exact same ancient survival mechanism we just talked about.
Right. The danger signal.
Exactly. Confirmation bias kicks in and magnifies how negative that loss feels. Leads to intense anger, frustration, that adrenaline or cortisol surge.
That red-hot feeling people talk about.
That's it. Rumination, can't stop thinking about it, maybe can't even sleep properly.
Wow.
And at the same time, remember, disconfirmation bias. It's actively blocking out any potential benefits or positives. Any lesson you could learn from that loss gets shut out.
So instead of seeing it as like useful data, valuable feedback, Your brain just yells threat,
Mm,
and you feel awful, maybe way worse than the actual dollar amount justified.
precisely. And you touched on something important earlier. The pain isn't just the money. Can we dig into that a bit, how it ties into these mechanisms?
Yeah, please do, because that feels key.
It is key. The pain of losing very often isn't just about the number on the screen. It's profoundly connected to the loss of fantasies and expectations we attach to a potential win.
Ah, okay. Like what could have been.
Exactly. A trader might be daydreaming about, I don't know, a new car, getting respect from others, status in their trading group, if this trade works out.
Right, the big score.
The big score, and the bigger those expectations, the more vivid those daydreams, the more intense the emotional pain is when it doesn't happen.
So the brain sees the loss of the dream as a threat too.
Yes, our ancient wiring is geared towards pursuing rewards. When that anticipated reward is suddenly snatched away, it feels like a genuine threat to our well-being. It triggers that same fight-or-flight cascade.
And that leads to,
Well, it often feeds into a desire to just avoid the market altogether, flee the threat, or perhaps worse, it leads to really destructive, emotion-driven actions, like revenge trading.
trying to win it back immediately.
Desperately trying to find quick wins just to make the bad feelings go away, which ironically usually leads to more losses. A real downward spiral.
Right.
And these are what we call dumb losses. They're the preventable ones. Losses that happen because you deviated from your plan due to emotion, or maybe you didn't even have a plan, or you ignored your own risk rules. That's the unnecessary cost of error.
That distinction is powerful. The pain isn't just financial, it's aspirational loss too. Okay, so losses are tough. What about the flip side? Big wins. They feel amazing.
Yeah.
Surely that's just good.
Is there a psychological trap there too?
Surprisingly, yes, there absolutely is. Big wins can also cause an adrenaline and cortisol rush. It's like that reward capture response kicking in again.
Feels good though.
It feels great. But traders might then accentuate how good it is, feeding pride, maybe future greed, and this creates its own narrow perspective.
How so?
It starts blocking out potential drawbacks or negatives associated with that win. Like maybe the market conditions were just a lucky fluke.
Right, maybe it wasn't skill, just luck this time. Or maybe the risk taken was actually way too high. But the brain, feeling good, ignores that. This leads to overconfidence.
The invincible feeling.
Exactly, feeling invincible, which can lead to ignoring stop losses next time, taking way too much risk, ignoring the trading plan altogether because I know better now.
Oh, forcing ideas onto the market.
Forcing ideas, yeah. And ultimately, it often sets up a boom and bust cycle. The brain, in its all-good confirmation mode, makes you blind to the very risks that can wipe out all those lovely gains.
Wow. So both winning and losing trigger these biases that can knock you off course. It's clear how they hit us during and after a trade, but what about even earlier? Like before we even put the trade on, can confirmation bias mess things up in our analysis? Or even when we're back testing a strategy?
No, absolutely critical point.
Yeah.
Yes. Confirmation bias often starts before you even enter a trade. A trader develops a strong belief, an expectation about what the market should do. Then, because of that bias, they subconsciously filter information. They only let in signals that support their belief, and they actively ignore or downplay anything that contradicts it. Countersignals, risks, poof, invisible.
So you end up taking trades you shouldn't have.
Exactly. You become blinded by bias, leading to low-quality setups, and then inevitable losses. Afterwards, you're scratching your head thinking, why on earth did I take that trade? What was I thinking?
Been there.
We all have. And it's rampant in backtesting, too, if you really believe your strategy is amazing.
You might just look for the good parts.
Precisely. You might skim the data, focusing only on confirming its profitability. You unconsciously ignore the vulnerabilities, the risks, the specific market conditions where it actually performs poorly.
Uh-oh.
Yeah. And that sets you up for some really painful lessons when you start trading it with real money because your testing wasn't truly objective. The bias hid the flaws.
Man, it sounds like we're constantly fighting our own brains here. This feels like a losing battle if our wiring works against us. But you mentioned something counterintuitive before. You said to be a successful trader, you have to become a very good loser. How does that even work when everything inside us screams, avoid loss at all costs?
This is a fundamental shift, a huge one. And it really is where mastery starts to begin. Losing isn't just something bad that happens sometimes. It's not just inevitable. It's an essential part of the game.
Essential.
Essential. Think about it. Many small losses are not only necessary, but are actually an expected cost of doing business if you want overall profitability. You have to accept that.
Okay.
Wins feel great, obviously, they're enjoyable. But honestly, they're often superficial teachers. They rarely teach deep, lasting lessons.
But losses?
Losses, even though they're painful, those are deeply transformative. They force you to reflect. They build discipline if you let them. They expose the flaws in your strategy, or maybe more importantly, in your mindset. You genuinely learn more about trading, about yourself, when you take a loss compared to when you hit a winning trade. Because the loss provides the clearest feedback on what needs to change.
So, okay, if losses are teachers, are all losses the same lesson? You mentioned dumb losses earlier. Is there a difference?
Massive difference.
Right.
Absolutely, Abushal. We need to distinguish between good losses and dumb losses.
Yeah.
A good loss happens when you did everything right. You stuck to your plan, followed your rules to the letter, but the market just didn't cooperate. Conditions weren't favorable for that particular setup this time.
So it's just part of the probability.
Exactly. These losses are expected. They're a natural part of any solid trading system that has an edge over time. You know, you can lose 50%, even 60% of your trades and still be highly profitable if your winning trades are significantly bigger than your losing ones and your risk management is sound.
All right, that makes sense. And dumb losses.
Dumb losses are the ones that sting because they were preventable. They happen when you deviate. You break your rules, you let emotion take over, maybe trade out of fear or greed, maybe you didn't have a clear plan, or you ignored your stop loss.
Those are the ones you kick yourself for?
Those are the ones. They represent the direct cost of error, and the key thing is they are entirely within your control to eliminate over time.
So managing losses starts with accepting they'll happen and then distinguishing between the good and the dumb ones.
Acceptance is the absolute first step. You have to accept losses as inevitable, as part of the process. Stop fighting reality. We often use this little phrase just to kind of center ourselves. Lo que será, será.
What will be, will be.
What will be, will be. It helps reinforce emotional neutrality. Focus on executing your process, not on controlling or getting hung up on any single outcome, win or loss.
Okay, this is all fascinating, understanding the why. But let's get practical. For someone listening thinking, okay, I feel this, I do this. What does this all mean for you? How can we actually manage these deep biases, these emotional swings day to day? What are the actionable strategies?
Right, the how-to. It really starts with cultivating a process-oriented mindset. Shift your focus drastically.
Away from the money.
Away from the outcome, the profit or loss on any single trade. Success shouldn't be measured by P&L alone. It should be measured by your adherence to your trading plan.
Did I follow my rules?
Exactly. Did I follow my entry rules, my exit strategy, my position sizing, my timing rules? Did I execute my plan? That's success.
And the profits.
Profits become the natural byproduct of consistently following a plan with an edge over a large number of trades. That's the real goal. True winning is sticking to your plan over a big sample space. Forget arbitrary return goals like, I need to make X% this month. That just forces bad trades and wakes up all those negative biases.
Okay, process over outcome. What about after a big loss? When you're feeling that pain, that red-hot anger, what's the immediate plan?
First step, accept reality. It happened. Don't fight it. Don't try to immediately force something to change. Just accept, okay, this is where I am.
Breathe.
Breathe, exactly. Once you accept, then you can create a recovery plan. And the very first part of that plan is stop the bleeding.
Stop trading.
Immediately stop trading. Prevent further emotional damage, further financial loss. Someone brilliant once said, if your rowboat is leaking, fill the hole. Don't paddle faster.
Ah, that's good. Fill the hole.
Fill the hole. And also, don't be afraid to get help. If you feel yourself spiraling, reach out. Lean on your trading community, a mentor, trusted friends. Don't isolate yourself.
That's incredibly important advice. Stop the bleeding, get support. Okay, so the initial shock is over. You've stopped digging the hole. How do you start climbing out? How do you practically get back in without just repeating the same mistakes and rebuilding that fragile confidence?
Good question. Next, you assess the damage. But crucially, gain perspective. Put the loss in context. You know, maybe a $28,000 loss feels devastating.
Yeah.
But if it's in the context of, say, a $200,000 profit year, it shifts the perspective slightly. It's still painful, but manageable.
Right.
Now, for beginners, if you don't have that track record of profitability yet, the best move might be to go back to a simulator. Rebuild confidence without risking real capital. Your positive track record, once you build it, becomes your North Star. It's the proof that you can do this, that your process works.
Okay, perspective is key. Then what? Do you just jump back in?
No, not usually. Then you might enter what some call trader rehab. This means putting immediate, strict guardrails in place.
Okay, like what?
First rule of rehab, size down. Immediately. Fight that powerful urge to size up to make the money back quickly. That's usually disastrous.
Right, the revenge trade instinct.
Exactly. Start small again. Maybe a quarter of your normal position size. Reduce the risk. Reduce the emotional stakes. Give yourself room to recover.
Makes sense. Less pressure.
Way less pressure. And second, focus only on your absolute best quality setups. The trades you have the highest conviction in, maybe 99% conviction, the bread and butter plays.
Well, only those.
To rebuild confidence, you want to generate small wins, base hits, not home runs. Your goal is simply to build a cushion of small, consistent green days. Prove to yourself you can follow the process again.
String together some wins, get the rhythm back.
Get the rhythm back, and implement specific guardrails like, I will stop trading for the day if I have 2 consecutive losses, or I won't trade if I feel emotionally compromised. Rules designed specifically to break that cycle of spiraling losses before it starts.
It sounds like it requires a lot of self-awareness, a lot of discipline, especially when you're feeling down.
It absolutely does. Discipline is paramount.
So beyond that immediate recovery phase, are there broader tools, maybe daily practices that can help bulletproof a trader's mindset against these biases and emotional surges in the long run?
Yes, definitely. There are tools and techniques. One specific thing some traders use is a pre-trade checklist or tool, sometimes called Bulletproof Your Mindset.
What does that do?
It helps you consciously identify and sort of ground your expectations before you even place the trade. What are my hopes? What are my fears? Acknowledging them can make the actual outcome less emotionally charged, less painful if it's a loss, less euphoric if it's a win. It helps detach from those fantasies we discussed.
Managing expectations up front.
Exactly. Regular journaling is also incredibly powerful. Write down your trades, yes, but also your emotions around them, your decision-making process. Why did I take it? Why did I exit? This helps you spot recurring patterns like FOMO or revenge trading so you can correct them.
See it on paper?
See it on paper. Mindfulness meditation, other stress management techniques, these can be huge. They help calm the nervous system, quiet the amygdala's chatter, and maintain focus, especially during volatile market periods. Think of it as a pattern interrupt for emotional reactions.
Training that prefrontal cortex again.
Always. And always, always analyze your losses. Treat them as tuition fees paid to the market. What can I learn? How can I refine my strategy or my execution based on this feedback?
Okay. What about goals?
Yeah.
You mentioned avoiding arbitrary return goals. What kind should we set?
Focus on goals you can control, performance-based goals, like I will follow my entry rules on 100% of trades this week. Learning-oriented goals, like I will master this specific setup, and risk management goals, my maximum loss per trade will be X, my maximum drawdown will be Y. Clear, controllable targets.
Process goals, learning goals, risk goals, not profit goals.
Primarily, yes. Also, crucially, learn to avoid crowd behavior. Develop your own independent analysis. Set clear criteria for your trades. Minimize the market noise news, social media chatter. Use data-driven tools to resist that herd mentality.
And apart from the crowd.
And finally, it all comes back to patience and discipline. Consistently apply your edge. Use clear risk-reward parameters. Have strict entry and exit rules. Maintain a routine for reviewing your strategies and your performance. It's consistency over time.
So what's the ultimate payoff then? For doing all this hard work, this self-mastery, how does it lead to that long-term success, that consistency everyone's looking for in such a tough field?
It creates this incredibly powerful positive feedback loop. When you commit to the process, to trading high-quality setups, sticking to your rules, your accuracy naturally tends to improve.
Okay.
That improves your profit-loss ratio. That leads to more consistency, which builds genuine earned self-confidence. Not arrogance, but real confidence in your process.
Right.
And that increased confidence then allows you to, in a disciplined way, perhaps gradually increase your trade volume or position size, which ultimately can lead to more money.
But it's based on discipline first.
Always.
Yeah.
The growth comes from discipline and process, not from impulse or emotion breaking your plan. It becomes a virtuous cycle built on control and self-awareness, not on chaos and hope.
Wow. What a deep dive, truly. So, if I'm hearing this right, the core lesson seems to be that success, certainly in trading, but maybe in anything demanding discipline under pressure,
Yeah.
it's not really about avoiding the losses or the setbacks.
But you can avoid them.
It's about accepting them, learning from them intentionally, and staying disciplined through both the pleasure of the wins and the sorrow of losses. always coming back to that process.
That's it precisely. True mastery in any field really isn't about always winning. It's about staying balanced, staying grounded, focused on what you can control, your actions, your mindset, regardless of the outcome.
Mm.
So maybe final thought for everyone listening. How can you apply this mindset, this idea of learning from every single outcome, becoming a master of your process? How can you apply that to your goals, whether they're in trading or something else entirely beyond the charts?